All right, so let's get into Bitcoin today. We're going to dive into some altcoins as well and take a look at the charts. Sometimes we will do these deep dives, give you guys some TA, and today is no different. You're going to love our guests. It's going to be fun. My name is Paul Barrow. Welcome back into TechPath. Joining me today, of course, is the pro trader, infamous man known as Gareth Soloway, hailing from the Bronx, from New York. How are you, Gareth? Are you doing okay?
Yeah, I'm doing really well, Paul. Good to be back. Great to talk charts.
Excellent, excellent. So I want just in case some of our new viewers are out there, if you have not been to Gareth's YouTube channel, you can go over to Gareth Soloway Pro Trader, jump right in, get some good TA from him. He does a fantastic job. Some of his cool breakdowns. I know you've got a show with Ben Cowan as well on some of the cool things. The No Shell Zone. I love that one. I watch that every once in a while. So anyway,
Nice.
big shout out to Gareth. So you guys check it out. All right, so let's get into a couple of things here, Gareth. I want to go over into your tweet this morning, and this is, of course, the CPI situation. 3.2 year over year, a little bit, below expected. When you look at this, Gareth, and the response in the market and what may flow out into the Fed's response on this, where do you stand right now? Do you see this as more neutral, or is this got kind of a wave coming at us that we may not be expecting?
Yeah, I think initially the markets were relieved, right? It was ever so slightly better than expected, yet still higher than last month, right? We did see an
Right.
uptick from last month's 3%. So for me, I thought that the initial rally was what maybe could have been short covering, maybe some short covering running there, some people just jumping in saying, okay, it's better than expected. But what's interesting here is that we've actually seen the stock market roll over. In fact, if I share my screen here, you guys can check this out. So this was the initial open on the S&P 500, and we had this
Yep.
really big surge up. But look at what's happened since. We're essentially back to the unchanged mark. So the question here is are people saying, wait a minute, yeah, we were slightly better than expected, but at the same time, we're still a little bit more elevated, which, by the way, anything above 3% is going to make it very hard for the Fed to justify cutting rates at the slightest hiccup in the economy.
Yeah, with that being the case, you've got Chair Powell. Obviously, he's kind of set this up for, more data gathering in his last FOMC meeting that we covered. When you look at this now, how does he respond to this? Is this something that they're going to set back on and say, okay, we've got to, and he did kind of indicate this is going to be higher for longer. We just have to be ready for it. What are your thoughts?
Yeah, so he has choreographed that, right? He has told us higher for longer. It's been the market that has kind of said, nope, no, we don't believe him. Let's keep rallying on risk assets. But I think we're starting to kind of recognize that. We see some of the Magnificent Seven tech stocks starting to crumble. Apple, Microsoft down. Even Nvidia over the last couple of days has taken a pretty big hit as that valuation is just so ridiculous. So I think for Jerome Powell, he's going to likely continue to stay hawkish because he doesn't probably want the stock market as high as it is. But I think, honestly, I'm in the camp that the Fed is done hiking. And I'm in the camp for that reason, because even though jobs have remained good, the underlying is not great, meaning that if you look at part-time work, there's been a big explosion in jobs in part-time, but
Right.
full-time is actually starting to weaken. And in the latest jobs report, what we actually saw was government jobs. That was a big gainer, but a lot of the private sector saw some reduction. So the underlying numbers in the jobs report are starting to weaken. And by the way, last thing I'll say too is consumer confidence has been another factor that the bulls have kind of hung their hat on, saying, oh, it's so good, consumer confidence. But if you break down consumer confidence to income, the higher incomes, it's been soaring, which makes sense because
Right.
the stock market's soaring. The lower income is actually plummeting the consumer confidence. And that's, again, these underlying numbers that really mainstream media doesn't delve into, but people should understand.
Well, I think that goes along with some of the data that we've been tracking on sentiment, because there's been this waffling of certain aspects and also certain assets. When you look at Ethereum and Bitcoin, which I feel like are people who are a little bit more affluent, they're willing to go into risk assets like that. Again, a little higher sentiment versus getting into some of the market, whether it's gaming or Web3 projects, we're starting to see a little bit of a downward trend. And to your point, initial jobless claims obviously looking a lot worse here for traditional. Once you get outside of more of the affluent, and when you look at that, and then you also look at this stubbornness around inflation, and you try to forecast this, whether it's into Q4 or into Q1, where do you feel that we might get a little bit of reprieve from the Fed in terms of timing?
Yeah, so I think the big thing is going to be the jobs reports going forward. So if you see a significant weakening in jobs reports, it's going to basically, guarantee that the Fed is not going to continue to hike. And one of the things that Jerome Powell said in the last press conference was that he was very much under the understanding that the delay in hikes is significant, meaning 6 to 12 months from when they hike rates till it actually hits the economy. So to me, that was a signal that the Fed is likely on the sidelines here. Now, it doesn't mean the Fed's going to cut. I think the Fed cutting is well into next year, but I do think that at least the Fed is signaling that they're understanding that the underlying data is weakening, and they're going to sit back and let these rate hikes take effect before they reevaluate.
All right. With that being said, from a macro standpoint, let's look at more of the fundamental analysis side, and that would be an ETF. You've got the deadline now coming up on ARK's application for a Bitcoin. It's just a few days away. If that gets pushed back, which we'll call that a denial, which is likely going to be the case, unless we get a real big surprise here. But it also could pave the way for another timing scenario for BlackRock and others for an ETF spot to come into play. Do you feel like that is a trigger moment for the markets, especially on Bitcoin?
Yeah, I do think the approval will see a significance. So any ETF that's based on spot that gets approved, my guess is you see 10% upside immediately. Okay. Like within minutes, you'll see Bitcoin up because everyone's going to rush into it, and shorts are honestly going to freak out and cover. The question is it a long-term catalyst? And I think longer term it is, because it does kind of give the additional validity to Bitcoin as an investment for a lot of Main Street. And still, we're still looking at older generations, baby boomers, who really aren't invested at all in Bitcoin overall. So I think there's a lot of money there. We know that's a huge amount of income or savings that could potentially come in. And then the question is, does it get into the pension fund side? Does it become accepted enough for institutions and pension funds to start adding it to their portfolio? And so I think longer term, any sort of approval is a nod from the SEC that this is a valid investment. And we've heard BlackRock CEO say that at this point. I mean, he's full all in on Bitcoin at least.
Yeah, well, we're starting to see Wall Street bellwether analysts starting to look at Bitcoin now for the first time, I think in a confident manner. They've always kind of dabbled a little bit, but never to the level that we've seen them kind of go hard on it here recently. Here was Dylan LeClaire. He made a statement. I wanted to get your take on this. Market is just derivative traders chopping each other up to oblivion. Spot bears have mostly run out of coins. Spot bulls are either fully deployed or on the sideline right now in TradFi waiting for an ETF approval. Just his take. What are your thoughts? Do you feel like that's kind of the condition of the market right now?
I do. I mean, there's the lack of volatility in Bitcoin has actually been astounding. I mean, when was the last time you and I sat here and said the stock market's way more volatile than cryptocurrency? And that's where we are at this point. So I do think that that's the case at this point, is that everyone is now waiting on this. And also I think we have to look at what happens. And this is my kind of negative for Bitcoin specifically, is that I think the regulatory stuff is behind Bitcoin. It's going to be slowly more and more accepted by the big players out there, the institutions, and really people in general. But my only concern for Bitcoin is if the stock market were to hit a major bump. And if we saw, let's say a drawdown on the NASDAQ back to October lows, if we look at the NASDAQ, in fact, I'm going to show my screen here because I think this is a really important point. I'm going to split up my screen and let's look at this, right? So here we have Bitcoin on one side and the NASDAQ on the other. If we go to the daily charts here, daily charts across the board, what we see if we zoom out on Bitcoin is that we only have retraced at this point a minor amount, right? So if we just do a Fibonacci retrace on Bitcoin to the lows, we've retraced about 25% of the down move. If we go to the NASDAQ, on the other hand, what's remarkable here is we've retraced over 80% from, at least at the highs. We've come back down just a little bit. But my concern is that if this is the best you get on Bitcoin with a huge rally in the NASDAQ, if the NASDAQ just trades back here, where does Bitcoin go? Does it end up going back to these lows of 15.7 or potentially lower? That honestly is my only negative case for Bitcoin. Aside from that, I honestly think Bitcoin is golden. I think it longer term, if your horizon is more than a year or two, I think it's a great investment.
when you look at the current situation with traditional investing, securities, et cetera, what is the catalyst, if any? I mean, sure, we've seen some earnings starting to retrace a little bit. Yes, you mentioned Apple. A lot of what we'll see with Nvidia's overvaluation. You even look at Coinbase, which I want to take a look at that stock, by the way, because Coinbase is a big scenario playing out right now within the ETH ecosystem. And this could play two ways. Obviously, they're sitting on a Wells notice right now, still trying to get through a lawsuit. But what are the catalysts that would cause the stock market to retrace to where it would have an influence on Bitcoin? Is there anything specific you're watching for?
Yeah, I mean, I think lately we've seen some little signs of that. For instance, Fitch's downgrade of U.S. credit, Moody's downgrading a bunch of banks and threatening the big banks with a downgrade. So I think a credit event would be one of those major potential scenarios that could freak things out. Weirdly enough, that actually could be a positive for Bitcoin. The negative for the stock market that I think would be negative for cryptocurrency and specifically Bitcoin would be more if we hit a recession with inflation still elevated. And if the stock market valuations come in significantly because of a recession and it's not a credit event at that point, I do think money would also kind of be pulled away from Bitcoin just because of the fear factor, the deleveraging going on in the system. So that's really the negative case for Bitcoin. Aside from that, again, it remains very rosy.
Yeah, I've seen, analysts on both sides. We've seen, if you listen to what the guys say over on the All In podcast, they're pretty heated on both sides of the case right now of, hey, we're going to see a soft landing. Others are looking at more of a harder landing. The key here, I think, is really getting back to the point you made a little bit earlier, and that is outside of the affluent class, you have a really struggling economy underneath that. And that is a large part of the United States. And eventually that catches up with itself, and it's mostly happening through jobs, job loss, companies doing recorrections, all those kind of scenarios. That's the one I'm most concerned about.
Yeah, and I agree with you on that. There's two separate economies. There's no doubt about it. You have people that are struggling because of inflation, and then you have other people that are invested, and therefore they're doing fine because even though inflation's gone up, their portfolios have gone up 30, 40% in this rally from last October. The other thing to kind of keep in mind too, and this is the one that bothers me the most, is, you're now at a point where the U.S. is now paying about $1 trillion of interest every single year. You have credit card debt at $1 trillion. You have the average car payment is something like $700 and change. So there are these things that are just sucking the lifeblood out of the economy. And for me, interest payments are the worst because you're not really getting anything from it, right? It's just, you're basically giving money away consistently. Where that money, $1 trillion, if it was put instead of towards interest, but put into the economy, would be massively stimulative to the overall economy. You could literally support tons of people with that type of money.
Well, and that's, we've done some analysis on that before around just going into money markets and, the light touch you get within your sitting on the sidelines versus going into some of the active markets. You're right. It barely covers the expense of money itself, which obviously with the inflation rate. And what is the real inflation rate? The likelihood is we're negative, well above 5%. So that's the other factor that plays into this. Trying to outpace it is very difficult. So, all right. So I want to hit a couple of stocks here, and then I want to jump into some altcoins with you. So first up, Coinbase. Very interesting stock right now. Some people might look at this as a little bit still overvalued from its high when Coinbase kind of came onto the scene versus where it's trading right now. What are your thoughts on this? Is there an entry point that you would be looking at for Coinbase right now trading at 83.70?
Yeah, absolutely. So let's take a look at the chart here. And it's always fun to look at these charts and see what's going on. So we saw the big breakout. We had this wedge pattern here. And basically a wedge pattern essentially is price chopping sideways, which is usually building for a big move. And you can see in this case, it broke out and went all the way up to 115 before slowly pulling back. So basically what you're looking for, if you're really a patient investor, you want to see a retrace to this area down here. I would say $70 to $60 in that vicinity. And that would be be an amazingly good buying opportunity. Now, you can take a little bit higher risk and buy in a slightly above 70. There's a little bit of a level right here at 71.65. But overall, a retrace to this area would be an absolute gem of an entrance. And you could argue that you could get that soon. Like if for some reason the Bitcoin ETF gets rejected early on here, or if it gets delayed, you could see a big drop in that situation. The one thing I would say about Coinbase is that their volume has died out because Bitcoin is not active, right? So we've seen the amount of trades and executions that they've been doing has died out. But the positive is that because they are looked at as being the safest of the exchanges, there have been a massive inflow of new customers. So their customer base has ballooned, especially with the you know, what the SEC has said against Binance and potential issues there. So, I mean, they are set up in a bull market to do really, really well. We just have to get to that point.
Yeah, for sure. Well, I think the other thing, when you look at just the ecosystem that is surrounding what is happening over on Base, we did a full breakdown on that. This is a big deal into the ETH ecosystem. Then you stack that with what's happening with PayPal, with the launch of their PYUSD, you know, also running on Ethereum. I look at this and I almost look at what Coinbase is doing as hedging heavily into the ETH ecosystem, obviously with what they're doing with Base. When you look at Ethereum right now as a long-term asset class, much like Bitcoin, how do you stand on it? What does your chart show for ETH?
Yeah, so the ETH chart looks very similar to the Bitcoin chart. It's just slightly weaker. And again, slightly weaker, which makes sense, right? It's not quite Bitcoin in and of itself, but it is the second biggest by market cap. So essentially you have this beautiful trend line here connecting all the way back to the lows. And that's the line for me that as long as that holds, I think Ethereum is generally a net positive. If that line breaks, and right now it's around 1775, then that would be a concern to me. And the reason it would be concerning is because this is a trend line, which is marking the lows, which is the uptrend. So if you were to break the trend or the trend line here, it does make Ethereum vulnerable. But let's be fair, right now it's above that area, and you now have the option to potentially attack 2000 or even 2135 as those two's highs. So for me as a trader, I'm just focusing on this trend line here. As long as it holds, I think you remain neutral to positive on it or bullish. If that breaks, then I would just be a little bit more cautious there. That could be a warning sign.
Interesting. Okay. Well, the point with ETH that, you know, obviously we look at is this a more advantageous play in this upcoming market shift? And when I say market shift, after our pseudo recession or after we see a correction in the markets themselves and we do start seeing some upside, you know, because many people would look at it, where do I play? Do I split and hedge my bets here and looking at ETH versus Bitcoin or Bitcoin versus ETH? That's kind of the big one right here. Wu Blockchain did hit on something that I thought is interesting. Rocket Pool now also tied in, and this goes into, if you guys are following staking ETH, and maybe this is brand new to you, but right now, staking ETH is much like where you can earn yields on you giving up your ETH, and typically it's done through either Lido or Lido, and also Rocket Pool. And the scenario with Coinbase is they're now opening this up to the Rocket Pool network, which is going to be another 3,100 node operator. So to me, I just think, man, all these are good signs for Ethereum. And I still see good signs for Bitcoin, but I'm starting to kind of weigh my balance as to what my portfolio might look like coming up next. With that being the case, let's talk about a couple other layer ones. And you go into projects like, let's just look at Solana, because that would be, I guess, your hedge. If you were going to go in as a hedge for ETH, what does Solana look like right now for you?
Yeah, Solana's actually hanging in there. And if we just take a look at the chart here, so one of the things that gets my attention first is these two blue lines, which mark a perfect parallel. And I love how charts have, everyone thinks they're chaotic and it's chaos, but there's some sort of, sense. It makes sense when you look at them. And you can see these lows and you connect the highs, and it gives you this perfect parallel channel. So one of the things I've noticed is that essentially you've pulled back after that big pop from the low end of the channel to the high. You've pulled back and you're just chopping. So if we just extend this line out a little bit, we essentially have a trend line that marks right off of here, and that's the short-term support at $22.40. I remain relatively positive on Solana over the longer term. I still think that the flush out we saw when there was fear on the FTX collapse, that Solana was going to collapse, that to me at least is a kind of the blood in the streets event for Solana. So I actually think, especially if it holds this 2250-ish level, we'll call it, I think Solana actually looks reasonably good here.
All right, so this was an interesting angle on Ethereum and other L1s. This analyst predicted that we could see a big die-off of the ETH competitors. Let's take a look at Solana, Avalanche, and others, mainly because of this ecosystem that seems to be starting to derive from a lot of what Coinbase is doing, especially on Base. When you look at that and let's say you jump into Avalanche as an example, you've got ETH, you've got Avalanche, you're setting on a potential roll with Solana. Where do investors go? Would Avalanche be a potential here, and how is it performing right now according to you?
Yeah, so Avalanche, again, being one of the smaller ones in the top 10, top 20, you just definitely want to be careful on that. But it right now is holding support. So what you'll notice is that a lot of these kind of the altcoins, they're all at support. And the reason why that's important is that if one breaks, they probably all break. But we can clearly see right around this $12.30 level, there's a pivot low, and that's what we're holding right here. If that breaks, you start potentially heading down to retrace to the recent lows from June, and that would be problematic. But right now, just like Solana, it's holding that support. So that's what you're watching. And again, as I come from a technical side where support is support until it's broken, and then you have to look for the next level. So right now, all of these are holding them, which means you have to respect it. But again, just be aware, if it cracks those levels, you can get a wave down of selling.
Yeah, which is, again, you would have to see some catalyst, possibly some pressure from traditional markets to kind of present itself and manifest for crypto as a whole. Okay, so just as a reminder for you guys, I know we've got some comments coming in on XRP. We are going to do a full breakdown on XRP. I don't know if it's going to be live or not, but it'll be right after this video. So we'll give you a full rundown on that. Do you chart XRP much, Gareth?
I do, actually. I've been doing it more so lately because of all the fun stuff going on with XRP. But let's just jump into it here. I'll show you guys some cool stuff. So XRP has a history of having these long periods of sideways chop, and then it has a big move. So what I like showing people is, like, you can literally go back all the way to early 2022, and you see this kind of wedge pattern breakout, and then it kind of consolidates again, forms another wedge, breaks out, another wedge, and then finally had the bigger breakout here. So one of the things I've been watching is you have a good support level on XRP around 58 to 59 cents. That is a retrace to this high. But again, you kind of mix the news with technicals, and we know that the SEC is appealing the decision. It could be a long, drawn-out process. So weirdly enough, you could end up in another long period of consolidation before that judge decides or the final decision is unveiled. So for me, I would nibble on Ethereum, on XRP. I would say 58 cents, and then just continue to kind of accumulate down in this lower range. Right. And it got a little bit of a bounce, but it's starting to pull back. But again, it was an amazing run off that news. But really, as a trader, I'm looking for those pullbacks to support.
Yeah, interesting stuff. Last question for you, Gareth, is when we look into Q3 right now, a little bit of a quiet start. We will see some interesting earnings for Q3. It's usually one of the quarters that really sets up a full year. Typically, by then, everybody, analyst-wise, kind of understands the position of a company. If you look at Q3 right now, and when I say Q3, meaning earnings primarily, is there anything that is potentially in, that 8 ball of yours that you're starting to think, here we come into Q4, we're getting ready to really wrap up the year in terms of overall corporate earnings. Anybody that you're really worried about right now outside of the major tech groups, such as Apple, possibly what we'll see with NVIDIA, because that could create kind of a domino effect within the market. What are your thoughts?
Yeah, I mean, I do think that the one thing investors want to keep in mind, at least when it comes to equities and the overall macro, is that the market, and you can see this by the VIX, which is a fear gauge, is just been at ridiculous lows now. Mm-hmm. We've started to see little pops on it, but it's still historically well below its norm. And to me, that tells me the markets aren't pricing in any surprises. And when you don't anticipate a surprise, that's usually when it comes, whether it's a black swan, China, Russia, things escalating there, or even just another scenario. But I do think investors have to be a little bit more defensive in this situation, considering that the lag in interest rates will likely continue to hit the markets or the economy. We already see some of the issues that we've brought up earlier in this chat. And then again, you just have to say, okay, well, no one's expecting a recession. Is that problematic? One of the things I brought up recently is Ben Bernanke in early 08 was like, guys, we don't think there's going to be a recession. And then, of course, we know what happened. And just last meeting, we know that Jerome Powell said the same thing. And that makes me nervous. It means the market's not pricing in any of these risk factors, which is when the market can be the most vulnerable.
That's definitely when you can get the rug pulled out from under you, no matter how much analytics you put at it, because the market kind of runs its own gambit on how it responds to some of these, not only these pressures, but obviously we're going into an election year, which will start to kind of cause some interesting groundswell in different areas as well. Hey, Gareth, it's always fun chatting with you. I want to wrap up here with our poll and see what the fam says here. What happens first, Bitcoin ETF approved or stablecoin passes? Wow, we are split at 52-48. What do you think about that? You like Bitcoin ETF odds? What are your odds?
I'm going with the ETF being approved first, mainly because I think our government is too messed up to get anything done.
Well, you and I are on the same page there when we get into thinking about that. Hey, Gareth, always good to see you. Thanks so much for stopping in today. We appreciate it.
Truly a pleasure, Paul. Have a great one.
You bet. All right, so you guys are maybe tuning in over on the podcast side of things. The good thing is that you're tuned in over there. The bad thing is you just missed a absolute masterclass on charts, and it's we bring Gareth in all the time. This is the place to catch it, though, is over here on the YouTube channel. So jump over here, make sure and hit subscribe and grab a little bell there. It will give you notifications when we do live streams like this one right here. And if you guys will, make sure to like this video, because it does help others that are brand new to this market start to understand what's about to happen in generational wealth. So have them do that just by sharing it out to someone that you know that's trying to get into this. Jump into the Diamond Circle if you're not in there already. We'll leave a link down below. Catch me out there on Twitter, @PaulBaron. We'll catch you next time right here on TechPath.